Good morning. I'm Matt Morgan with the Advanced Ag Network, and here's the corn report for Friday, November 19th. U.S. corn futures ended higher Thursday, rebounding on a weaker dollar and tight supplies. December and March corn contracts each improved by 16 cents, closing at $5.41 and $5.55 per bushel, respectively. The national cash corn price increased by 15 cents to $5.33 per bushel, 8 cents above where it started the week. Cash prices in Chicago and Memphis climbed 18 cents to $5.08 and $5.49 per bushel, respectively. The national corn basis continues to fluctuate as it widened on Thursday by a penny to 9 under the December futures. We had a chance yesterday to catch up with Bruce Blythe, our business editor at the CME Group, to get his opinion on the corn market.
Hello, this is Bruce Blythe with Advanced Ag Network here at CME Group in Chicago. It's the afternoon, Thursday, November 18th. Markets have been closed for a little over 2 hours now, and we saw a pretty good bounce across the grain room today. Corn was up 15 3/4 cents at $5.41 a bushel in the December contract. It's up from a 6-week low at $5.09 we hit yesterday, although it is down about 10% from the 2-year high at $6.05. Hit a little over a week ago in the wake of that bullish USDA crop report. Impetus today seemed to be a recovery in the U.S. stock market, which reflected some abatement in the fears over an European debt crisis unfolding. Traders keeping a very close eye on what's happening in Europe. Any turmoil there often spills into the commodity arena. Jack Scoville, an analyst with Price Futures Group here, said the price break in corn led to a lot of end user buying over the past week. Livestock feeders and ethanol makers primarily, they're trying to lock in supplies. Out of concern, prices may move even higher into 2011. Speculative commodity funds, of course, big buyers all year here. They've sold off a lot in the past week. Rich Feltus, who's with R.J. O'Brien, also in Chicago, says it's not clear whether they're done selling, at the wake of this recent downturn, but if we can hold the recent lows in corn, confidence in the bullish longer-term fundamentals will continue to build. And although some say we may have seen the highs for this year in corn, there's still talk we might see $7 plus next spring, as the so-called battle for acres ramps up between corn and other crops. China also continues to be a big theme here. They've been a big buyer in soybeans this year and have turned a net importer in corn. Heather Jones, who's an analyst with BB&T Capital Markets, says the demand picture for corn is more bullish and less dependent on China. She says the livestock demand has not softened, and she expects maybe some contraction in the herd. It's unlikely to be very large. So, again, continued bullish longer-term sentiment here seems to be in place, and we will see how that plays out in coming weeks. Once again, this is Bruce Blythe, Advanced Ag Network at CME Group in Chicago.
Look for corn to open 2 to 3 cents lower this morning, as the overnight market could not build on yesterday's rally. This has been your corn report for Friday, November 19th. Have a great weekend.